Home Services and second team leader Champions Real Estate team. So every Wednesday we jump on and talk about real estate over the last week in the Omaha metro area. Try to keep you up to date on what's going on and the latest real estate news and things of that sort. So we start off every week with a quick tip. So a quick tip this week. One thing I always try to think the best interest of my clients ultimately, but is how to keep more money in your house savings account. So what I mean by house savings account, that's the saving. It's the account basically in your house, which is equity. So I try to make it easier. So some people don't understand what equity is. Equity is basically the amount, that you owe on a house versus what your house is worth. And that difference there. So if you owe $50,000 on your house, if you could sell your house for $100,000, essentially you have $50,000 of equity in your house, or I would say your house savings account. You can get at that money by getting a HELOC, and you basically then you're paying interest on your own money there. But when it comes down to the different types of loans, I guess getting back to my quick tip, is you have FHA and conventional loans. So with an FHA, the big selling point is you can get into a house at 3.5% down. Well, that's great. You can get in with 3.5% down, but you're getting less money into your house savings account because you also have to pay an upfront mortgage premium of about, correct me if I'm wrong, it's like 1.75 or 1.5% of the purchase price. And so you're paying that percentage to get that mortgage. Whereas on a conventional, typically it's about a 5% down. That whole 5% is going into your house savings account, i.e. your down payment, building that equity for you. So what that means is so from an FHA, you have that 3.5% down that's going into your house savings account, but then you're paying the government 1.75% to get that loan essentially. And then you're paying that off. It's going on to your mortgage. Well, 3.5% plus the 1.75 equals about 5%. So when you look at both of those options, if you can get that 5%, save that money, put it into your house savings account, not giving it to Uncle Sam, that's just the surface level. I can go into a whole in-depth, show you numbers. If you have more questions on that, that's what we want to start that conversation and get those questions answered, is because there's a lot of lenders, a lot of agents out there you hear, on, the talking heads on Instagram, YouTubes and things like that. Get FHA, you can get it 3.5% down. Yes, that's correct. But you're also putting less money into your house savings account rather than into your savings account. You're paying Uncle Sam, which I don't want to pay. I'd much rather pay the government less money than I have to, and keep more money in my pocket and in my clients' pockets when they're buying a house. So, excuse me, if you have questions on that, Russ is the man to ask. Go through that. I can go through it with you, and go through that. So Russ Williams is obviously, I guess I introduced Russ Williams with Williams Mortgage, is joining us today. Sorry. God, we had to take the kiddo to the hospital the other night, and I only had 2.5 hours of sleep last night, or the night before. So I'm still operating on that. So anyways, we got 2-month-old at home, so it's keeping me active. So anyways, all right, let's jump into our what's going on in the real estate market over the last week. So show these graphics every week. So we had 600 homes, which is kind of surprising. Exactly 600 homes go active when I ran these numbers this morning. Over the last week, we had 339 new contracts written, so pending contracts, and 369 happy new homeowners this last week. So congratulations to them getting in before the holiday season starts. So I guess what's our take on that market snapshot here? So we're kind of seeing the similar thing as the last couple of weeks. We're right around that 550 to 650 new homes coming on the market every week. We're about that 350 new contracts written. We're still seeing interest rates tick down just a little bit, but they're still higher. But when I was talking in our mastermind groups that I had last Friday, the market is still active. It's not as crazy. We're not seeing as many multiple offers on some of these homes. But one of the agents in that mastermind group, she had a house at 310. She sold that house in 24 hours. So I think it depends on the house in particular, but it's still a great time to get out there. There's a little bit less buyer competition, but you still have those houses that are ready to rock and roll. The sellers put the time and energy and effort into getting those homes ready for the market. They're still seeing, good offers coming in on those when they're priced accordingly. The thing, what I mean by that is last year we had 62.3% of the real estate agents in the Omaha Board of Realtors sold 2 or fewer houses. Well, if you're not in the market, you're not selling a lot of houses and not actively engaged in the market, you may think we're still in that summer market and you're pricing your house a little bit higher and not adjusting for what the market is doing today and being knowledgeable and keeping informed of what's going on. So that's what we're doing here at Champions Real Estate Team, is basically we want to keep you informed. So, when we get your house on the market, we want to maximize your equity and not overshoot the price. And then all of a sudden you start seeing price reductions, and then those buyers come in and say, oh, that seller may be desperate to sell. And you end up selling it for less than what we could have got you had we priced it accordingly in that marketplace. And every market segment's a little bit different. So you have to really, be knowledgeable about what, neighborhoods, what's going on in your neighborhood in that regard. So when I take a look at the 30,000 foot view, this is what I mean. When you take a look at this 30,000 foot view graphic that we show every week, these numbers don't change that much. What I mean by that is, we're at 3,100 homes, 1,785, we were at 866 last week. And the numbers, but we obviously sold 300 some homes. But what we saw is on new construction, those builders are getting foundations in the ground and getting ready for the spring market. So that jumped up. Last week, I think it was about 860 or so. So we got another, 50 or so new construction homes jumped on the market. But this graphic, if we go back, hasn't changed, fluctuate very much, in that regard. So our months of inventory went up. It was at 2.7, 2.8 last week. We're at 3.3. Our average sold price for November, but this is through the entire year. So for November was at 340. For the entire year, cumulative is at 335. So we're still seeing some appreciation out there in the homes in regards to that. So, but so let's jump in here with Russ and see what's going on in the real estate or in the mortgage side of it about getting that money to buy those houses. So how are we doing, Russ?
Doing pretty well, Mark. You hit it right on the head earlier. You mentioned interest rates have improved, and we did see a little bit of improvement. And we're hoping that we'll continue to see that. Certainly, if that is to happen, we likely need to see continued softening in the jobs market. The reason we got the improvement we did is because every first Friday of the month, there is a release from the Federal Bureau of Labor Statistics called the non-farm payroll report. And it came in quite a bit below what the expectation was. And they revised some of the prior months down as well. So that we've talked about this before. The last shoe to fall, so to speak, before we see a slowdown in recession is jobs. And some in the market are thinking that maybe we're starting to see the leading edges of that slowdown. Having said that, you also hit it right on the head that we still see a very active market. We've seen multiple offer situations over the last week, even with interest rates improved. We're also noticing that more and more people are paying points to buy down the rate. Maybe they don't feel comfortable or believe that we might see lower rates in the next 6, 12, 18 months, whatever it might be. And so paying points is very common. In fact, nationwide, somewhere between 1 and 2 points on a mortgage is what the average is that's being paid to buy that rate down. And there's no hard and fast rule, but generally speaking, every point that you pay, a point is equal to 1% of the dollar amount of the loan. So if you're borrowing $100,000, that point is 1% or $1,000. And that might reduce your rate by anywhere from on the low side, maybe an eighth, to on the high side, maybe 0.3%, depending upon the loan term. So you can get that interest rate down permanently if you want, or you can get that down temporarily. And we're happy to show people how to do that and explain it to them so that they can make the best decision based upon the information they have.
Yeah, it just goes down to knowing your options. And I think that's the one thing that I love, about what you do, from a mortgage standpoint, and what I try to, coach and, educate my clients on is, hey, there's options out there. What tools in the toolbox do we have? And I've found in my 15 years of doing the business, sometimes I've worked with clients or clients that bought houses in the past, and they come and they work with me for the first time. Like, well, I didn't even know that when sellers are paying buyers closing costs, that you're just allowing them to finance it into loan. I thought they were paying that for me. I'm like, no. And so the misnomers, and you don't know what you don't know, and there's nothing wrong with that, but it's just working with, a great mortgage loan officer with Russ or one of our agents here at Champions, and we're going to coach you of, here's your options. Like I said, our quick tip, does FHA make sense for you, or does conventional make sense for you? Do you want to put more money in your pocket, or give Uncle Sam, their fair share on an FHA loan because it's a government loan, but there's times when FHA is a great option for people. So you can get into a house at a lower down payment, but you're building that equity on your monthly payments. So you can get your foot in the door to start that home ownership. So there are, I'm not saying FHA is bad. It's just, you got to know your options of what's out there. And I think some agents are like, oh, what the lender say? Oh, lender said I'm doing FHA. Okay. Well, and then when it's a competitive market, like we touched on before we even started the video here, is if you're FHA and there's 5 conventional offers on the table at the same time, your FHA kind of goes to the back of the line, unless if you got a really, really high offer but ultimately it's going to have to appraise. FHA is not going to give you the money, the difference. And, if you're doing FHA, you probably don't have the cash to make up an appraisal gap. So if you can get into those conventionals at 5%, knowing that you're putting more money in your savings account than giving it to Uncle Sam, you don't feel as bad because you go, oh my gosh, I'm putting 5% down. I'm losing that money. And that's how when I bought my very first house, I'm a fourth generation in the real estate. My dad's like, do a conventional for this, what I'm explaining here. He goes, you're putting more money. And I was like, well, I don't want to lose my money because I'm taking out of my stock account and putting it, and I'm thinking down payment, I'm going to lose that money. No. You're taking from one investment vehicle being the stock market, and I'm putting it into real estate, and I'm putting it into my house savings account, i.e. equity. And then I was like, oh, and then it took a little bit of while for that to click in my brain. And I think if I was in that same situation, I felt like I was knowledgeable. I grew up around real estate. The average person out there is probably in that similar mindset as me. And I just want to try to explain it in a way that my clients, my friends, my family can understand it and go, does conventional make sense? Or does, FHA make sense? Either one, they're great tools in the toolbox, but when do you need to use that? And that's what we try to help you here. Heck, I can take you out there and show you how to write a contract and get a contract accepted, and great, congratulations, you bought a house, but was that the best way to do it? And so that's what we try to do, is that, we're not out here just trying to, as an agent, try to cash commission checks. We want to make sure, we want you to be we want to be your real estate resource for your entire, time you're thinking about real estate, and then educating you on, okay, now you bought this house, is this going to be a good rental? And educate you on the real estate investing side. Because I don't think, a lot of agents don't take it that next step further, to generate wealth. We're seeing, I just, today I was talking to somebody that their company, 2 companies I know locally that have done layoffs, and like, guys, we lucked out and didn't get in this round, but it's like, take your own financial freedom into your own hands, potentially, by creating some kind of alternative way of income, be it passive. Real estate investing is not passive income. And yes, you're getting income from it, but you're still having to do tenants and do that kind of stuff. But it's a good way to generate that wealth. And if you have equity in that house, and let's just say, God forbid, unfortunately, you get laid off, you can pull a HELOC and you have, a potential emergency fund if you need it. So there's a lot of different options, and that what we try to do here is help you guys out. So, but as always, if you have questions, or want to just throw an idea out there, or want to listen to me to chat about anything on the real estate side, happy to do it. I can talk about this stuff all day long. So I just got done teaching a 3-hour CE class to other real estate agents. So I'm teaching a class next Wednesday called the coaching the real estate investor. So if anybody's interested, even if you're not our real estate agent and you want to jump in, it's a free class essentially, to do that. So that's here at the Berkshire office from 1 to 3. 1 to 4. But yeah, so if you have questions, give me a holler. Happy to help. But anything else, Russ?
That's it. Have a good week.
Cool. Yeah, rock and roll. Enjoy the nice weather out here in November, and we'll see everybody next week. And thanks again for listening. Subscribe, like, all that kind of fun stuff on the social media platforms. And